There's one level in the market right now that has the power to make or break the next leg higher. And it goes much deeper than just being the top of the breakout range, Friday's low, or the monthly resistance trendline, or heck, even the yearly resistance trendline. The market profile is far more critical to understanding why this level is so important and just how weak and poor the low from Friday actually is. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 4 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. Believe it or not, we'll kick things off today on the SPX yearly timeframe chart so we can lay to rest any major concerns about the yearly resistance trendline that originates from the Great Depression. You can see if we connect to the high of the dot-com bubble, you're currently getting price action banging its head right into the resistance trendline currently. So the question becomes, are we concerned about a major yearly pullback off of the resistance trendline? And to me, the answer is absolutely not. And we can use a similar argument to what we've been doing on the monthly time scale, where if you use the same origination point, the Great Depression back here, and connect the trendline to all of these highs from in here, yes, the market did pull back a little bit more meaningfully into the mid-70s. However, I would argue that the cyan circle is very similar to the white circle in here. And once we retested the trend line, you could see that the market broke out and went parabolic. And really, this is the early 90s and the dot-com bubble forming in the first place. So could you make a similar comparison that the market is currently retesting the trend line? And if we go through, maybe it's going to turn into the AI bubble as we move forward into the 2030s and beyond. Is that possible? It certainly seems like yes. So am I putting all of my eggs in one basket and saying, oh my God, the yearly resistance trendline is the end of the market? Absolutely not. And we've done a similar exercise here on the monthly time scale. So let's drop it down to the monthly. And of course, the resistance trendline that everybody's still concerned with is this one in here, which roughly ties in with about 6,300 in the SPX. But you could do the same thing. And if you just look back through history, let's come in from the Great Financial Crisis high and do something that looks like this. The market certainly, banged its head up against the trend line, but on the retest, it breaks through and actually probably offers support above the trend line before continuing higher in the post-sickness world. So in my view, are these major monthly higher time frame, yearly higher time frame resistance trend lines anything worth trading off of? Absolutely not. Let's do what we do best and drop this thing down to a weekly time scale. Let's go back over to the SPY, clean drawing set, and let's jump into a non-logarithmic chart. Here we go. And let's take a look at candle structure and location. Let's get this analysis going as we typically would. In terms of candle structure last week, you've got yourself a green hammer-esque style bar. So of course, in the lower wick, it would imply that sellers did step up to make this low. However, buyers clearly responded from the low and were able to move prices back up not just to the opening print, but of course, because this is a green-bodied bar, through the opening print for range expansion, and there was a strong close towards the upper portion of the weekly range. There's just a little bit of an upper wick here, nothing overly worth reading into. So structure is bullish. In terms of location on the bar-to-bar count, notice that we do get a higher low as well as a higher high. It's very nuanced, but it is there. The weekly close is ever so slightly over the previous week's high, so I would still argue that location is bullish. If we just think about the concept of the weekly trend, is the trend up or down here? Of course, the trend is up, and we've just closed at a brand new higher high in the weekly trend count. So therefore, would it still be reasonable to expect, if the weekly chart did pull back, is it possible to find a weekly high or low? The answer to me is absolutely yes. And there's 2 key levels that we've been tracking for this. We know that the previous all-time high, around 613, would be the best place for a weekly high or low, something that looks like this, and then continuation of the trend in the upward direction. The next level beyond that is the top end of the 2 red-bodied bars back here, which is a little bit closer to about 604.75. We can see that with some more clarity on the daily chart in just a moment. Both of these locations would still yield a weekly higher low in the trend count, noting that we have lows higher lows via the gap up, and this is a soft higher low because the daily trend never flipped to down inside of this box here. Obviously, we're above the 50 SMA on the weekly time scale. We're above the Fibonacci 38.2 if we come in from here to here. The more relevant fib is probably from the bottom of the cycle action from the gap up to the high. And you can see that the 38.2 in this case is actually more closely aligned to the previous all-time high test back here around 613. So that would really build a compelling argument that a weekly higher low is available to continue the trend in the upward direction. Let's take those off and let's take a look at the anchored view apps on the weekly time scale. We're above the entirety of the stack, nothing new to learn about that. And let's come in here with the weekly volume profile, just to reinforce the idea one more time that the top end of this high volume node here is actually the two equal highs from the red-bodied candles back there. Once again, that level is about 604.75. So if you want a weekly higher low, as long as price action is over 604.75, you are good to go on the higher time frames, and I would not be concerned about the monthly resistance trend line, the yearly resistance trend line, none of that stuff, right? So short-term price action is going to rule all. Let's take a look at even shorter-term price action on the daily time scale. The first thing we should evaluate here is the weekly expected move. The weekly expected move is this gray box right here, and if you're not familiar with this study, check out the video tutorial in the top right-hand corner. If we're contained by the upper bound, the number is at 635.38, and that of course would imply a higher high in the trend count and a new all-time high as well. If we're contained by the lower bound, the number is at 619.78. It's a very nuanced higher low relative to last week's low, but relative to this major higher low on the daily time scale and the daily trend count, it's still absolutely a higher low that would preserve the daily uptrend. So the weekly expected move is bullish here. There's a couple of things, though, that I really want to key into on the daily time scale that centers around that Friday low. And we'll get into the market profile and just how nuanced Friday's low is, but we can see it very visually here on the daily chart that we have a balance range, right? We have equal highs happening in here and equal lows happening down here. Now make note that on the Tuesday gap up, we technically moved over the equal highs, which was a bullish breakout attempt. Let's label that breakout attempt number 1. It clearly failed via the close back inside of the breakout range, and you could see that there was no attempt from buyers here to offer a hold over the range highs, or even here at the gap fill reversal to the Monday high of last week. Prices closed really weak towards the low end of that Monday session as well. So we know that Wednesday sweeps the low, tests and makes the equal low, so on and so forth. What I'm getting at here is that we finally have the beginning stages of a successful breakout attempt, right? In this circle here, we could label this BA2, breakout attempt number 2. And it's starting to look like a more successful breakout attempt because bar number 1 closes over the top end of the range, and bar number 2, Friday ultimately, still closes over the top end of the range as well. Notice, though, that the low does test the exact high. So if prices were to come back down underneath 626.65, I would start thinking of this as a failed breakout attempt, and that leaves two chances where the buyers failed the mission to continue to elevate prices in the upward direction or allow for price discovery in the upward direction. So that would start to really suggest a look above and fail on the daily balance range, right? So this look above and fail already completed by moving to the bottom end of the balance. If it's going to happen again, if we take out Friday's low, look above and fail might suggest the bottom end of the balance again. And I would really only look for that opportunity if price action sets the lower high underneath 626.65 and then breaks down underneath Thursday's low at 624.65. From there, you might say something along the lines of risk and reward to the bottom end of the range, noting that we have trapped overhead supply on the second failed attempt to break out of the balance. Now, this is taking a fairly bearish approach to what's going on here in the market. If we just take at face value Friday's candle, we are holding over 626.65. And I would actually say that the base case should be, if this is a low, your next major higher low is probably here. So any consolidation on the daily time scale that is over the top end of the range inside of Friday's session, so over 626.65, under 629.25, I would really be thinking of that as bullish consolidation and seeking upside out of the market that looks something along these lines here. It's probably very faint on your screen, but we technically have a label on the overnight all-time high from Friday morning session. It's at 629.83 in the SPY. And something to carry forward here is that all-time highs are typically not made in the extended hours session. They're typically made in a regular trading hours session. So it doesn't guarantee that we need to break out over Friday's high, but the odds would certainly favor it. Again, not a guarantee, but probably elevated odds, and those odds would only increase the more time we spend over 626.65. I do just want to remind us that if we throw on the daily 20 SMA here, let's throw on this one and zoom back in. Oh, thinkorswim with the lovely auto zooms whenever you adjust the studies. Notice that the 20 SMA is starting to provide confluence right at 618.50, which is the bottom end of the range. So is all hope lost if the market pulls back in and gives the look above and fail? Are we throwing in the towel and saying, oh my goodness, the market is the most bearish we've ever seen it, if we're still over the daily 20 SMA, which is confluence at the bottom end of the range? To me, the answer is absolutely not. So although there might be a short trade to get to the bottom, I would not overstay my welcome on the short side. I would really still only have a short thesis that's worth anything for more than maybe a couple of days if the market takes out 613. Something that maybe goes, sure, look above and fail, navigates to the bottom end of the range here, consolidates, comes in. I would only be looking for a major short from really point A down to point B here. This is the top end of the ceasefire gap. It's the top end of those weekly inverted hammer highs, the red-bodied bars that we were just talking about, around 604.75. Were we not just talking about a weekly higher low around here? There's maybe the opportunity for a daily protracted down move if we were to get underneath that 613. So that's what I see on the daily chart. Let's maybe take it on down to the hourly chart. Let's get a little bit more granular here. You could really start to see the low of that Friday session is very, very precise to these prior highs. What that would indicate to me, the level of precision basically, is telling me that short-term buyers are in control of this potential hold here. This is not big new money buyers stepping up. New money buyers stepping up really looks something along these lines where, oh my goodness, it's just let's buy it all. Let's buy it on the ask. Let's buy it on the bid. It doesn't matter. Just send it higher, right? This is really not that. This is very, very nuanced off the top end of the range here, which is why it's such a mechanical level, and we'll add into this as we move into the market profile momentarily. Now you can clearly see that if you use the Tuesday gap up high here as well, a majority of the consolidation actually took place underneath that on Friday. So if we're going to get upside out of this market, it probably requires holding here, then looking for longs over 627.75 into the Friday gap up high. If we can get that, there's probably a decent trade for risk reward along these lines here, and then ballooning runners to test the overnight all-time high once again at 629.83. That's the base case for upside should we hold 626.65. Another base case here for upside is going to be if we sweep 626.65 and then produce a higher low above. I am very interested in the long here to do the same exact thing, but I would be willing to take the long at this level, not necessarily waiting for the higher low over 627.75. Let's think about why this might be the case. It's really because if we have short-term momentum buyers trying to support price action in here, it's very likely that they have a bunch of stop losses stacked underneath Friday's low back inside of the balance range. You would start to think, okay, if we fail into the range, the momentum breakout's not there, let's stop out of the trade. So if all of those stops get swept, and yet the market is still able to then set a higher low back over 626.65, I'd be very interested in that rotation once again towards the all-time highs and blue sky territories in the upward direction. So that is another bullish base case higher. Of course, if this higher low does not show up, if we start to see a lower high underneath, so something that looks like this, and then we see a lower high forming here, 2-minute chart, 5-minute chart, 15-minute chart, lower highs underneath 626.65, it's probably a breakdown back through this level here on this look to get down to the bottom end of the range, just like we talked about on the daily time scale just a moment ago. I do want to come in here with a forecast measured move based on the balance range. We know that if we typically break out of a balance, we're looking for a range double. So if we double this range, a 100% extension over the top is actually beautiful confluence with the upper edge of the weekly expected move. Once again, that number is 635.38. We can come in here with a Fibonacci retracement, on the other hand, from the low up to the high. And lo and behold, the Fib 38.2 is right along the lines of that key hold that we were just talking about anyways, around 624.65. So if the market does come in and set this kind of higher low here, that would be over the Fib 38.2 that we were just looking at. I would conclude that that would be a bullish hold. If we take a look at the anchored VWAPs intraday, you can see we're above the majority of the stack here. Let's just anchor one maybe to, what day is this? 7-3. Let's come in with 7.3 on this anchored VWAP just for the sake of seeing what's going on from that perspective. 0703, that'll be good. That'll really mark the beginning of the balance. So the anchored VWAP from that perspective is really just in the midpoint of the balance. If anything, it might slowly start to creep up and offer confluence around 624.65, which once again would be my line in the sand for maintaining the short-term bullish stance. As long as the pullbacks are shallow and above that, I would still be looking for upside. And once again, the range double is the upper edge of the weekly expected move, 635.38 as a potential upside target. Let's move into the market internals. So we're all clear, right? We know what upside, we know what downside looks like. The big bear thesis on the daily only really steps in if we get this to the bottom end of the range, maybe some sort of lower high in the range, break the range, lower high here. This under 613 is where I change my tone on the higher time frames, right? And then we would have a bunch of trapped overhead supply here. Let's get down to the market internals, though. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner for a quick run through. In terms of whether or not Friday's action was really all that bearish, let's maybe throw on the clean drawing set for the ES futures. Remember, the market did pull back. It failed to hold up on the gap fill reversal, but it did hold up over the top end of the balance. So did we really see strong sell side action at the exchange level on Friday becomes the question. The answer here from a volume perspective is no. The answer here from an advanced decline line perspective is we did flip negative, but we started fairly positive. We did not make it in trend lower zone, so maybe a little bit more neutral there. I certainly don't think that it would indicate new money sellers getting involved. The index score was red on the session. That's to be expected when you're underneath the opening print, but it wasn't aggressive down towards like negative double digits all day. You got a couple of prints down there around negative 10 earlier in the session when the major breakdown was coming in, but as we really balanced into the afternoon, it was sort of single digit sevens. It doesn't really strike me as a big bearish move on the index score. If we look at the cumulative build, it is again bearish. We have to give credit where credit is due to the sellers, but recall that substantial cumulative builds, both down and upside, are going to be net over 5,000 or net under negative 5,000. We just didn't get that into the close here. You can see negative 3,300 roughly into Friday's close. So as a base question to just ask and answer, do we have stronger sellers stepping up at the exchange level, or is just a mild pullback? Sort of aligns more with the idea of just a mild pullback thus far, not aggressive new money sellers. Let's take a look at the market profile for our ES futures, and this is really where we can get nitty gritty. I know I made you hold out here until, the very final component of the ES analysis, but let's take a look at this. If you're not familiar with market profile, we do have a video tutorial. Check out the video in the top right-hand corner, the whole 9 yards. So what we firstly want to look at is where value developed on Friday. Value is obviously lower. Value is about 70% of the volume transactions on the session. Value was inside of value from Thursday, but it was lower on the individual session, which makes sense because we saw that obviously we had bear flag consolidation towards the lows. But where this gets far more compelling is if we zoom in on, in particular, the Thursday-Friday interaction. Remember that we talked about in the pre-market prep the single prints from the Thursday session in D period back here. Those D period single prints filled, and that's exactly where the market started to bounce from on the Friday session. So, okay, let's think about it from this perspective. Is your uncle who wants to invest in the S&P calling up his, portfolio manager saying, hey, can you go buy some shares of the S&P? Is Uncle Joe looking at the single prints closing on Friday, or is this short-term nuanced momentum buyers trying to buy this on a pullback looking for upside? Probably the latter, right? So if short-term buyers are in control there, what do they likely have? And we talked about this on the hourly chart, right? It's very likely that you have a bunch of stop losses stacked underneath Friday's low. But let's take it one step further. What else is in this area? Well, you can see that we have value area low from the Thursday session as well. And the market gets very close to that. Another very short-term nuanced level that short-term participants, short-term momentum buyers, pullback buyers, would be paying attention to. So that's another reference point here. Another one, it's a poor low. If you look at G and H period, there's no excess on the low of Friday's session. So is this the proper end of the auction here? The answer would seemingly be no. So if we need to repair that low, if we need to break through this mechanical section on the chart, I would tend to think that everybody should just be all eyes on Friday's low on Monday. If we come into the session on Monday and we open over Friday's low and we start testing it early in the morning, I would expect this level to break. I would expect there to be a stop run. Now, how deep does the market go here? That's a very difficult question to try to forecast. I would argue likely not that deep because the higher time frame trends are still absolutely in the upward direction, and your clear-cut signal is just going to be whether or not the market moves back into Friday's range. If you take Friday's low and do this, you open inside, you break it and come back above fairly quickly, this is exactly what we just talked about on the 1 hour chart where I would want to be long at Friday's low with a stop underneath this higher low, targeting something like Friday's high, the all-time high. If we break below Friday's low and you notice that a ton of volume is coming in, transactions are keeping prices underneath, then guess what? We're probably looking for lower on the look above and fail. So first thought is that we understand that this level should break if tested. And once again, that's Friday's low, very close to about 63.20s, 63.21s in the S&P futures. If we zoom in here, we can get a little bit more granular. What's the actual number? 63.2325. If we take that out, you can see one TPO of excess in H period. That's not enough in a market that's been trading many, many more handles than just one tick's worth of excess. So with that, Friday's low, key level. And this is why. Market profile tells us everything we need to know. There wasn't really a huge volume taper in here. A little bit, right? You go from about 7,000 contracts, 5,000 contracts, 3,000, 1,000. Then you get into sort of hundreds. But typically the taper on a big excess low is going to be far more meaningful. Look at this, right? You go from 1,000, 2,000, 1,000, 1,000, maybe a 3,000 in there, but then you get a number of different hundreds, and then you get a double-digit print on the low. That's what good excess looks like in the market. So that's something I'm really tracking here in the market profile early on this week. And if you just want to keep it simple, if you're like, forget about all this market profile stuff, just tell me what the level is, just watch Friday's low. It's that simple. Do we break Friday's low and quickly come back in? I'm talking about within 15 minutes. Or do we break Friday's low, stay below for like 30 minutes, and then start looking for downside, right? Another thing that's just starting to capture my attention, not that it aligns beautifully, and it's actually, it's not as pretty as maybe we might have hoped for, but interestingly enough, the Tuesday value area high is very close to this sort of zone in the market, about a 3-point zone between 63.26 and 63.23 that we were just looking at, right? So base case is if we test Friday's low, we're looking for that to break, and then it becomes evaluating whether or not we stay in or out of range, okay? That's it. That's the market profile here. Let's jump back over to the platform. Let's take a look at the QQQ. We're going to save you the time on the higher time frame monthly and yearly. Let's go to the weekly though, so we can understand that there's been much more of a meaningful break in the upward direction out of the Qs, the NASDAQ side of the market. Not really a shocker considering that tech has driven this move in the upward direction. If you take a look at the candle structure, it's not nearly as hammer-esque. It's more of a solid green-bodied bar, a little bit more of a meaningful upper wick relative to the S&P upper wick, but hardly anything relative to the candle's size overall. Still a strong close from buyers in the upper third of the range. Bulls on parade. Obviously, a bar-to-bar higher low as well as a higher high, and a much more meaningful and clearer close outside of the previous candle's range as well. The trend is obviously up. This is the highest high in the trend count. I'm going to sound like a broken record. Of course, markets could pull back, find a weekly higher low here. It's also much tighter confluence with the top end of the two red-bodied bars as well. In your QQQ, that's roughly around 537.5. If you want to use the previous all-time high, it's closer to 540. If we bring out the Fibonacci's, I'm going to save you the time on the April lows, but let's come in with this one. Fib 38.2 is right at the previous all-time high. It makes sense. Once again, 540 is that key level. If we throw on the anchored view apps from the weekly perspective over the entirety of the stack, and we can quickly check in on our volume profile as well, just to make sure we're not missing anything obvious here. Starting to get a little bit of a volume build out, so if there is going to become overhead supply underneath this balance range, should probably send it just through the thin structure on the solid green bodied bar. Again, this aligns perfectly the top end of the high volume node with the previous all-time high. So very reasonable stuff in terms of pullbacks, nothing detrimental here on the weekly. Let's get down to the daily chart on the QQQ and let's take a closer look at the weekly expected move. What can we tell from this chart here? You've got yourself the gray zone. So upper edge is at 569.54, implying a higher high, new all-time high. That's bullish. Lower edge is inside the balance range, very subtle higher low. I would still conclude that the expected move is bullish here. That's 552.98 for those who want the exact number. In terms of trend, obviously the trend is up. This is a higher high. It's the all-time high in the trend count here. One thing that you may or may not run into on Thinkorswim, you get some upper wicks here, some phantom wicks if you've not corrected these bars. If I right click and click on correct this bar, you can see two edits that I've made to the actual candles. So if you're looking for the exact high of this candle from Wednesday, it's actually here at 557.94. And if you look at the edit made to the 18th, which is Friday's candle, the actual high is at 563.32, depending on whether or not you've made this edit, or depending if on Thinkorswim updates their data, you may have a funky upper wick through the top of that bar. Anyways, in terms of the balance range breakout, you can see that it's much cleaner in the upward direction here, and you've probably already come into a rough doubling of the balance range. Yeah, absolutely. Just based on a quick eyeball test, we're home. So this 563.25, could it act as resistance just from a range double perspective? Sure. Measured move is there. It doesn't take away from the fact that the trend remains in the upward direction, and I would still just be watching very closely Friday's low. If we pull back under Friday's low, not the end of the world, I would still expect the opportunity for a daily higher low attempt over the top end of the original range at 557. That makes a ton of sense, right? Something that would look like this, and then seek continuation in the upward direction. Just like like the S&P, we do have an overnight all-time high that was set on Friday morning's gap up, and that's around 563.80 flat. Okay, 563.80 is the overnight all-time high. Carry that forward. The all-time high should not happen in the extended hour session. If we do see a little bit deeper of a pullback, I really, I really hate the idea of being short in this balance range. It just doesn't make sense. I really even hate the idea of being short here. It's very, very difficult right now to maintain any sort of short bias on the NASDAQ, considering some of this chop and slop that we have underneath us. If the market's going to build out a much more meaningful reversal, I would love to see, and maybe I shouldn't even say love to see, but if we are going to trade that as a downside reversal where it becomes, okay, this looks a little bit more reasonable, you're probably looking at a head and shoulders to develop. Left shoulder head, right shoulder back in the range. And then if we start to drop this, then fine. There might be enough overhead supply in the box where it becomes reasonable to look for that previous all-time high test. And then as we know, what's the idea here? Weekly high or low. Let's not lose sight of that. Once again, around 540, 541 is the level that I would use based on some of this action that was happening right over here. Let's drop it on down to the hourly time scale here and get a little bit more granular. You can see once again the precision, the hold of this into the end of day on Friday. You could probably have a subtle breakout level in here if we wanted to add something to the charts around 561.25. You guys know the deal, round numbers only. We'll make it gray and dotted. So if we do something that looks like this, let's cooperate, think or swim, nice. The pathing is just generally going to look as follows. If we get this consolidation, Brigade Bolt here, I would look for the all-time high, risk reward as an intraday trade. From there, balloon runners into blue sky territories. If we do see some sort of drop underneath 560.25, notice that we do have this helper level in here. And it's actually going to play decent confluence with a little bit of single print action on the QQQ or the NQ futures, depending on what you want to use. As long as we're over 559.50, I even wouldn't be bearish there. I would think that we could sweep the low of Friday, support 559.50, get a higher low back inside of Friday's range, and then rinse and repeat all the same ideas that we just had over in the S&P side of the market, right? So you get long here, ultimately targeting the high. You could reestablish a long here if you're sort of more of an intraday operator trading this with different opportunities. So that's this and that's this. But that's the name of the game, as long as we're over 559.50. If we start to drop that, I would think that this is probably worth a trade, right? You could take a scalp on the short side from A, let's say to B down here, but at point B, I would be much more open-minded to the possibility of a daily high or low off of 557 for all the same reasons that we've been talking about across both of the broad markets right now, S&P and NASDAQ. If we come in with a Fibonacci from here up to here, Fib 38.2, so if we sustain that 559.50 level, we would be above the 38.2. That's bullish. If we take a look at the anchored VWAPs intraday, we're above the entirety of the stack. And once again, let's just throw this on the sort of July 3rd, was it? July 3rd, 0703. And let's say yes, good. Yep, there we go. So this is the beginning of the balance range there. Slowly over time, you might get confluence out of 557, building the argument for, once again, a daily higher low shipment here. DHL, they're on the way. I really don't want to be short in this box, right? Why do we not want to be short here? We talked about it really on Wednesday's midweek market update, but look, sellers who shorted lows got screwed every single time. Do I want to be short in this box? Probably not, until there's a major change in the tides that would probably show up broad market wise in terms of tempo, in terms of market internals, in terms of sector rotations. We would probably see it elsewhere, and that would be more of the signal to say, okay, maybe we do want to be short in the box if we're seeing supporting evidence that sort of gives us the green light. But we're not seeing that yet, right? That's what we'll get into as this video goes on. Let's take a look perhaps at the market internals for the NASDAQ side of things and see if we can learn anything different here. Any big downside market internals on Friday? Volume says no. Advanced decline line does not get into trend lower zone. The cumulative build is even more tame than what we saw on Tuesday. Really does not strike me as an end of the world breakdown here. Seems more like a mild pullback. You can see I've got these blue or sort of cyan boxes on the NQ futures. These are the single prints from the Thursday break in the upward direction anyhow. To me, as long as we're sort of over that, it's a nuanced area, short-term buyers in control. Maybe we sweep the low to repair it and grab all the stops and then come back above. That would be a bullish response. Again, same concept as the S&P 500, and we'll see it here as well. Let's give a little okay, I guess, refresh the data. Let's take a look at the NQ. Can we do something that looks like this? Oh, we really got to refresh the data, huh? Wow, look at that. What happens if we go Command R? Logging back in. Here we go, NQ futures. Can we get anything? Anything here on the NQ futures? No market profile for the NQ futures. Lovely. Absolutely lovely. I'll throw up a screenshot of it and I'll just highlight the single prints on the screenshot for you. And there we go. And we'll move back over to the platform and we'll take a look at everybody's favorite long lost uncle, the IWM Russell 2000 small caps. What's going on from this perspective? Smalls up on a weekly chart. Let's start here. Let's take a look at the clean drawing set. And there we go. So much more of an indecisive doji when it comes to candle structure. Decent size upper wick and lower wick relative to the size of the candle body. It would just indicate a little bit of indecision here. Market participants unwilling to really drive higher, but also unwilling to drive lower. I would think that this balance is acceptable after a breakout over this previous high to digest some of the gains, and the location of the bar and the location of this balance really does strike me as nuanced and bullish, because if you do something that looks like this, previous neckline of this as a head and shoulders is now acting as support. It was acting as resistance here, and we also get the weekly 50 SMA, the blue moving average, on your screen. As long as we're above that, I really wouldn't have any major concerns about the small caps, and it does seem to me more like bullish digestion. We can come in from here to here and just make note that we're well above the fib 38.2, and we can also come in from a couple of these lower highs, well above the 61.8, increasing the odds of a 100% retracement. But let's come in from the all-time high down to the April lows. Notice that the lower wick of last week's bar is a perfect area of support off of the fib 61.8, increasing the odds the more time we spend above. We do make that navigation in the upward direction towards the all-time high. If we come in here with the anchored view apps, this will be a little bit more telling than the other indices. We're above the entirety of the cluster, and these will slowly start to act as a supportive group underneath price action here. As long as price is over about 215, I would maintain that bullish stance here on smalls. We can come in with the volume profile on the weekly also and just point out, if we zoom out, as long as we're not falling back down into this low volume void, I would tend to give the buyers the benefit of the doubt. This is a reasonable place. Remember, high volume nodes, point of controls, it's not really a good place to initiate a new trade. It's a great place for trades to conclude, and it's a great place for the market to balance, right? This is what this is telling us, is the market has deemed this area a fair price to do business. It's very efficient in terms of distributing contracts, shares, whatever you want to call it, towards this location. So the next attempt at some sort of price discovery, it's not really discovery because we've been up here before, but a break in the upward direction would then try to figure out, okay, are we going to balance at any of these higher levels? Are we going to dub some of these higher prices fair? And of course, that would require higher valuations. It would require buyers obviously stepping in to support that thesis, the whole 9 yards. But as of right now, everything I can see on the weekly, so far, this has been a solid advance back over the neckline, and that's the big takeaway here. So if small caps are participating, or at least looking okay and healthy, it's probably bullish underpinnings for the S&P as well. A little bit less in terms of intermarket dynamic supporting the QQQ NASDAQ side. Let's take a look at the daily chart of the IWM. Let's get a little bit more nuanced here. You've got yourself weekly expected move. It's probably a bit more balanced than what we saw in the S&P and the NASDAQ, just noting that the high, it's not really a new all-time high, of course, but it's only slightly over last week's high. And of course, the low is just an equal low. So a little bit more balanced on the small caps, which once again is reasonable at the point of control or the high volume node on the weekly time scale. If we're inside of this range, I would think of this as the possibility of bull flag consolidation on the daily chart. And really, you just want to stay over 217.50. You've got your daily 200 SMA in green here. Maybe it's slowly, it's pretty flat right now. There's really no slope to it, but maybe it starts to offer some confluence there. On the weekly chart, remember we said as long as we're over 215, we're sort of okay. You've got your daily 50 SMA creeping in the upward direction here as well. So everything's sort of working along the lines of bullish consolidation here on the small caps, not really a failure. If this is going to turn into some sort of major double top on the daily, maybe there's a short here underneath last week's low. I don't think I would be all that compelled to participate in it, and I would just maybe take that as a little bit, not a major, but a little bit of a headwind for the S&P 500. If we look at the candle structure, notice that the Friday bar, it's not quite as compelling as what we saw in the S&P and the NASDAQ. It does not hold up over its key level here at 223.25. In a picture-perfect world, it would have been gap fill reversal over the high or just staying over these previous resistance points, which you can see very, very clearly here on the hourly chart. Notice how the market ran right into the level, ran right into the level, right into the level, so on and so forth, all these different instances. In a picture-perfect world, yeah, the higher low would have been above. So I'm a little bit more, again, kind of neutral to balanced on small caps here, noting that you're still in the range and you've not given a successful breakout attempt here yet over this local high from this area. You might actually draw the conclusion and say something different that, okay, this was breakout attempt 1, it failed. You got the bottom end of the range. This is breakout attempt 2. So far, it looks like a failure. If price stays underneath 223.25, maybe we use this as a headwind to say, hey, let's dial back those expectations of a long trade in the S&P if the small caps are underneath 223.25. It's a small data point, but it is technically there if we want to use that same sort of logic in terms of counting breakout attempts. This is breakout attempt 2, and it does not look successful thus far with the failure to hold. Let's come in here with the Fibonacci's from the bottom up to the top. Just take a look at the 38.2. We are holding over it. If we come in, though, from, let's say, what's really the origination of this rally, let's come in from this low up to this high. We're over the fib 38.2 here. So I think the daily analysis still stands. We're primarily bullish to neutral on the daily. It's really a short-term failure that I would be concerned about if we're underneath that 223.25. How about the intraday anchored VWAPs? Let's take a look at this. These clusters will be a little bit more meaningful. And if we go to the July 3rd anchored VWAP here, let's just grab this one and do it for the sake of doing it. Let's take a look at 0703. And we'll see where that lands. Right at it on Friday's low. Interesting. So if we break below that, or if we just generally hold here and then break it, I would tend to think that you at least want to be looking for the midpoint of the range, 220.25. And again, this is all being carried forward as a headwind to the S&P. If you're over 223.25, rock and roll, we're looking for longs in the S&P, and probably with a decent amount of confidence, right? Let's take a look at our market internals for the small cap side of things. Let's go on over to the Russell. What do we see here? A little bit stronger volume outflows, definitely not as neutral as the S&P or the NASDAQ. This is about equivalent to the S&P and the NASDAQ, and as is the cumulative build. So does it look like new money sellers are really hammering this to the downside? Not really, maybe just a reluctancy from new money buyers to participate on the highest high gap up over the top end of the balance range. It may need further balance, it may need some sort of catalyst, and perhaps that catalyst is going to be any commentary from Jerome Powell as we get closer to the July 30th, not this Wednesday, but the following Wednesday's, I was going to say CPI, but the FOMC, right? The rate decision from the Fed. Let's jump over to this platform. Looks like we finally loaded our NQ data. So maybe instead of having to do the extra edit in post about I'll do it anyways, but just so you can see it here in case you're watching, there is your single prints on the NQ. There's your hold. As long as we're above that, same concept as the S&P. But let's talk about the Rusty Russell and just the idea that you have an incredibly poor low. So that concept still stands. This is weak. It needs to be broken. It doesn't need to be, but hypothetically, you would think that if you have a bunch of stops stacked in here, it's very likely that it breaks. You go on a run. Notice that you have thin structure through A period on that Thursday morning squeeze. I would tend to be thinking about some further downside. So Friday's lows across all of the indices really seems fairly susceptible based on the market structure. Another thing that I would loosely point out here is you do have a string of single prints on the top side out of the Russell, where these B period prints are sort of giving you a double distribution, D1 up here and D2 down here. If you spend more time in D2, even if let's say you don't break Friday's low yet, but if you're in D2 and failing to get into D1 up here, it would have to be carried forward as a slightly more bearish data point, right? You could do something like this as well and just call out that, okay, previous highs here are now really the top end of the singles. So if you're underneath the Thursday, underneath the Tuesday highs, it still looks nothing more than a failed breakout over the top end of the range, right? And that's going all the way back to some of the commentary we had here. Looks like nothing more than a failure to move outside of 223.25. That's it. That's how it all comes together across the three majors. And once again, I think that the idea for the broad market as we head into this upcoming week's worth of trade is to watch very, very closely early on in the week what happens with Friday's low. It's really all about that. We have a ton of short-term buyers off of this very nuanced level on the Friday session. Can they hold above, or are they all going to get swept out? And does it quickly come back above? That's a long. Or if we stay in here, we know that there's a possible short to the bottom end of the range underneath 624.65 with respect to all of the consolidation we've been putting in. Is this an easy trade to pull off? It probably falls on the more difficult side of the spectrum. If you've been showing up to the pre-market preps, right, you know that we talk about this easy and difficult spectrum. There's easier and there's more difficult in the market. Trading is not easy, but some trades are easier than others. This breakdown to the bottom end of the range probably falls on this side of the spectrum. It's going to be more difficult. You clearly have a lot of previous held positions in here. You have a lot of evidence that suggests buyers have stepped up many, many times through here, especially on that Wednesday fake out given the news cycle. So it's probably a more difficult short to play out. It's probably an easier trade to try to look for this higher low which is in alignment with all of the higher time frame trends anyways, weekly, daily, even monthly for that sake. It's probably easier to go in the direction of the trend. Anyhow, let's move along into our sectors. Let's see what's going on from this perspective. Who was leading, who was losing, and where was the weight? Technology leads the pack, followed by utilities. That's a little bit of a red flag. Utilities is a lighter weight risk-off sector anyways. But then we have the semiconductors up 1.4%. At the bottom end of the barrel, it's the energy sector. That's a better look. That's a lightweight sector. Healthcare, lighter weight. Now these days, it's the fifth heaviest weight sector by market cap, about 9%. And it's also more defensive. Materials, the lightest weight sector, down about 1.02%. So in terms of posture, doesn't strike me as the end of the world. I would say maybe a small little flag here on the utilities move, but for the most part, tech and semiconductors have dominated the push in the upward direction. You can even see that financials on the week outperformed the S&P by about 4 basis points, 75 versus 71. Let's check in on the structural charts and just make sure that there's no red flags. XLK looks fine. This isn't an uptrend. There's plenty of room for higher low consolidation here. Continuation, that's 258.50. Even if it pulls back down into the range, I would be neutral here. It probably correlates to some sideways balance in the S&P, but it's not bearish. I think that's the bottom line, right? It's not bearish here on the higher time frame weekly. You still have a great shot at a higher low. If we look at utilities, we did break out to a brand new all-time high here on Friday. Small white flag, as we've made note, utilities being a lightweight and deeper defensive sector should not really fuel a market push towards all-time highs, but note that the S&P did ultimately pull back during that session. It didn't close at the all-time high. And, pair that with an XLK that looks like this anyways. I don't think this is like, wow, let's not trust the market up here towards the highs. It's no, XLK could easily consolidate. It's not like we're totally and only driven by the utilities. I would be much more concerned if the XLK was like, let's say it attempted the all-time high, came back in here and was doing this, and then the broad market made a new high on a utilities chart that looked like this, or even just like what it looks like right now. If that was the case, huge red flag. All right, let's start looking for shorts actively in the S&P. It's just not the case. If we look at the SMH, it's going to be a rinse and repeat of the XLK basically. Any consolidation up here is great. Brigade bolts into blue sky territories is fine. If the market pulls back, as long as we're over the previous all-time high, no issues. We've been tracking this level for quite some time at 283.20. Moving along to industrials. Anything bearish to say about this? Nope. Obviously, you've got a red-bodied bar up here. It is possible that you get some pullback, but once again, higher lows are really the name of the game. And even if we were to get think about it from this perspective, it would be okay if the weekly chart of the S&P 500 pulls back for a weekly higher low, right? That's well within the confines of something that could happen and would probably be healthy for market structure. So if these pullbacks unfold, I'm not running for the hills until the higher time frames really start to dramatically shift into a much more meaningful downtrend. If we look at the XLF, it looks great. Look at this beautiful hold over the top end of this previous high here. Break, Brigade bolt above, looking for continuation in the upward direction. Financial earnings, really the big banks, came in fantastic over the last week's worth of trade. If we look at real estate, nothing to talk about here. Moving along to discretionary, chart still looks awesome. I mean, regardless of some of the stuff that's going on with Tesla, just sort of stuck in the range. Amazon's been a little bit like a slug. Look at this XLY chart all up. I mean, tell me it's not perfect structure in the upward direction. Of course it is. Break the top of the range, pull back, hold it as support, move back up to the equal high. That's bullish. So as long as we're over 217.65, no issues here. Staples in the midpoint of the balance range there, no red flags on that. If we look at communications, mild pullback right to the previous all-time high. So far, a couple of hammers are starting to stack up, around this level. If we could support over 105.60, if we could start taking out some of these highs here, just south of 107, I would tend to think that going back to the all-time high is the target. And of course, that would be bullish pressure for the S&P. This is, basically dethroned the XLV in terms of healthcare and sector weight. We'll see that in just a second. Energy, not much to talk about here. As long as it's over this, maybe some small upward pressure for equities. Energy, as we typically know, is associated with inflation anyways. So as long as it's not cracking new all-time highs, kind of fine with energy's position right now. If we look at the XLV, this is maybe something worth talking about. If it does break down, it'll act as a little bit more meaningful of a headwind for the S&P. Obviously, it's no longer as heavyweight. It's only 9% instead of being double digits, closer to about, 15, 18% earlier on, or just prior to this big change in market dynamics. But if it does break down, I have to imagine it acts as a drag for the S&P all up. So really paying attention to this 129.25 if it does get weak. But for now, it's been in this balance range for so long, I don't think there's, it wouldn't be a top priority, right? It's like, what is it? Isaac Newton's whatever law. Markets will remain in motion, or an object in motion will remain in motion until acted on by an outside force. Same concept. We're getting off topic here, but why would we expect that this would be any different until the break actually happens? When and if there's a lower high underneath, fine, but the base case probably continues to just support the idea that as long as we're in the range, we actually should expect that to act as support, right? Let's move along to XLB. You can see a great higher low attempt coming in here over 89. The more compelling chart, though, is the XHB, which looks very similar. Remember, we've been tracking the weekly double bottom here over the neckline. Nice higher low starting to come in off of that $100.50. As long as we're above, it speaks well to the cyclical side of the economy, which generally is going to continue to keep the engine alive, so to speak, for consumer spending and the S&P overall. If we move along to, let's jump into the TLT. There's a great opportunity to sell some puts on the Wednesday session with the Jerome Powell volatility and drama, if you will, between the administration and him. Unfortunately, that ship has sailed. You're probably already up meaningfully. Last I looked, you're already over 50% of credit received out towards the end of August on sold puts towards the lows of Wednesday's session. So probably worth buttoning that up and just reclaiming the margin to use on a different trade. If it breaks down again, maybe we'll be interested in that trade. But for now, I think it's kind of nothing to do as long as we're over 85. Let's move along into our sector ratios and see what's going on from that point of view. If you're not familiar with ratio charts on Thinkorswim, by the way, we do have a video tutorial in the top right-hand corner. I would not say that anything here is sounding the alarm bell for a risk-off rotation, but I do think we need some improvements out of the risk-on sectors. The XLK is the glue that's been keeping the market together. I would love to see outperformance here. We're not getting it. I would love to see outperformance here. We're not getting it. Same thing here in the XLY. So these three are really more so neutral, but this glue, as long as it's in a nice uptrend here, can't really have a bearish stance on the broad market. If you look at the risk off sectors, this is still in a downtrend. That's not really an issue. This is getting a little bit of a perk up there. Utilities on that Friday session, which we talked about anyways on that breakout bar from Friday. But is it still in a downtrend? The answer is yes, underneath a downward sloping 50 SMA. That's the gold moving average on all of these charts. If we look at the specialized ratios, you can see the same thing. This is still looking bullish. This is looking bullish. This is looking bullish. This looks fine and bullish. This looks fine and bullish. This is even getting a little bit of recovery. And I'm not going to go through the exercise again, but this is the Russell 2000 growth versus value. If you go down to the Russell 1000 growth versus value, it looks exactly the same as all of these other charts. So you can set that up on your own if you'd like, or you could take my word. If you take a look at some of these additional risk on-off charts, gold is not signaling, hey, watch out, trade war again, or anything crazy here, flight to safety in gold. Not getting it. The ratio chart is pretty flat and sideways to down. If we look at Bitcoin, it continues to fire off the green Sailor Shift tool, and we have a little bit of an inverted hammer on the weekly candle from last week's close. Obviously, a little bit of a pullback there. Let's just go full screen so we're not squinting at the top of the candle here. A little bit of a pullback after the breakout, but is there not a higher low possibility here over the breakout level? To me, it looks fine, and we know that Bitcoin continues to act really more so as a risk asset, so if this is holding up, I would tend to have more of a bullish stance on equities as well. Let's go back to this so we can see the TLT ratio moving in the downward direction. That speaks well for risk appetite in equities. There's no flight to safety happening there. If we look at the dollar, it's starting to reverse trend here, but it looks like the correlation has broken a little bit. Not fully, but a little bit. Obviously, the market pulled back on both the Wednesday and the Friday sessions, where you could see, the dollar has been holding basically over its key level at 97.75. So if this full trend reversal is going to be underway, if we do crack for a new higher high, I would be a little bit concerned about a headwind for equities. It's one data point against all the other bullish data points that we've seen thus far. Interest rates have not done anything impressive. They're still in this box. They're still tangled up around 4.4. Yeah, it's helpful when they're, as an indication, it's helpful when they're moving towards the extremes of balance, because maybe we have a fade trade off the highs and lows. And again, it's not so much actually fading bonds or looking to do something in bonds. It's more about, okay, what does this mean for the broad market? So for now, kind of nothing to talk about in rates. If we look at short duration rates, the inverted ZT, to get a sense for what the Fed might do, still probably like 97% odds of a pause. Let's just jump over to the Fed tracker tool and see what's going on with that. Yeah, 95.9% odds of a pause here for the July meeting, which is on the 30th. So again, not this Wednesday, but the following Wednesday. What we continue to keep tabs on is just whether or not there's going to be 2 or 3 cuts into the end of the year. Remember, it was 3 not too long ago. Now it's back to 2, 1 and 2 here. And I would think, depending on any commentary from Powell on the 30th, these odds might shift again. We could even go from 2 to maybe 1 rate cut into the end of the year, depending on really their view on inflation. Now, inflation, if we just take a look at what happened last week, right, the only place you really beat was on the month-over-month non-core. Where is it? Sorry, core month over month. My apologies. Consensus view was looking for a 0.3. You actually got a 0.2. A little bit of a beat there, indicating a little bit less inflation than anticipated. However, a 0.2 annualized is still going to get you a 2.4 plus on the actual year over year read. And you can see that the year over year core here at a 2.9 is not the Fed's target of 2%. So anybody who's saying, oh, there's no inflation, the numbers would say otherwise. If you look at the PPI month over month, there was no inflation on the producer side month over month. But if you look at the year over year on the producer side, you're still looking at a 2.6, which is also not the Fed's target of 2%. So do I believe that there's still a reason to keep rates slightly higher? Yes, as inflation does come down. Let's just have this conversation quickly. Can we get to a white screen somewhere? This is fine. If you hold rates steady and inflation comes down, technically the distance here gets wider, right? And that's representative of the real rate. So if inflation has backed down from, what it was, well over 3% at the peak of, the post-sickness move, then rates are just naturally getting tighter by not doing anything. It's probably appropriate to ease rates slightly, but probably not to the degree of what everybody in the headlines is talking about. Let's slam rates down to 1%. That's a little aggressive based on what's going on with the actual inflation print. If we take a look at the calendar for the upcoming week's worth of trade, it's really all about Thursday, the usual stuff here. You get jobless claims, that's the usual. Then we do have PMIs, it's the flash from the S&P Global side of things. It typically offers a little bit of a reaction, so it's about 15 minutes into the session. You do get Powell speaking at 8:30 on Tuesday, but it's not a Q&A. If we open this up, you can see it's just opening remarks at the review of the capital framework. So I imagine this is going to be Powell, as he's done in the past, walking through a timeline of where the Fed's been, what they're doing now, and what they look to do in the future. This policy worked in the past. We're continuing to do this. We're reevaluating that. It's just going to be a summary of what the Fed does, right? So I'm not really expecting, there is no Q&A expected. I wouldn't think of this as a major market moving event. It's also pre-market anyways at 8:30. He's not going to be speaking for an hour giving opening remarks there. So not overly concerned. Once again, Thursday is your main event over here. As we look at the earnings calendar, we did get some decent earnings last week, namely TSM, with a nice bullish break in the upward direction for semiconductors. This week, it's of course going to be all about Tesla, all about Google. This is really the big ones that I'm watching for here, as well as some of the little underlying names as well. GEV, nuclear, right? That's been a darling of ours in the long-term accounts. That's a fantastic play. Obviously, the one everyone's on right now is OKLO. So kudos to anybody who's, is it OKLO? OKLO? Yeah. Kudos to anybody trading that and doing well on it, so on and so forth. But GEV will be a big tell. If it does gap down, I'm probably looking to add shares there in the long-term account. So we'll continue to keep tabs on that. Any other interesting names here? You get some of the military-industrial complex, Northrop, Raytheon, all those names. What else? Lockheed. I'm just looking through. This is actually my first time really scanning the calendar here with you all. American Airlines, they usually have something to say about travel, but I don't think it's all that important. Dow Chemicals, I think that's it. I really think it's all about Tesla, Alphabet, and probably here, GEV. You could maybe say IBM, the old guard of tech, the dinosaur, if you will. Watson, and then maybe Chipotle, the world's most expensive burrito, is, just a proxy for how consumer spend is looking. They've made note in the past about substantial decline in same-store sales, which the market responded to quite meaningfully. So that's really it on the earnings calendar. I'd say Wednesday is your main event for the market. Let's jump back over to the platform. Let's finish up our look through the additional data points here. Still no breakout in the bonds on the long end of the curve, but you can see that they're meaningfully moving higher here. This is a sign that the market is concerned about inflation. So not only did we have reads that were an uptick, I think one thing that I maybe glanced over with these inflation prints, right? These are definitely upticks. Look at what's going on here on the actual progression of inflation. It's not like an, oh my God, the market's going to sink style uptick, but it is an uptick nonetheless on the year over year. So is inflation directionally moving in the right direction? It's hard to say that with a ton of confidence. Obviously, these three reports are very substantial, and we're still down from here, being north of 3%. I'm not going to sort of deny that, but as a vector, this isn't really what we want to see, especially as we know the whole tariff deal is supposedly going to start showing up here over the next couple of reports. Remember that June data was the first data report that, based on the Beige Book, was supposed to include more meaningful tariff implications. Let's get back over to the platform, though, and look at the actual technical implications of what's happening with the charts. If this breaks out, I would be more concerned about inflation. It has not done so yet, and I wouldn't really get overly concerned about it until it actually does. I wouldn't like front run this idea and say, okay, let's just start shorting the market, or let's do something crazy in the bond market to get ahead of this. No, let's just use it as an indication. Still in a downtrend here, still pretty neutral here. So the short end is still expecting rate cuts to end out the year. I don't know why we drew a circle, but we did. Let's move into our credit spreads, rolling over into the end of the week happening here. That's bullish for risk appetite. If we take a look at the junk bonds in isolation, these are still divergent. Notice that even on some of the gap up days, you really didn't get any follow through out of the junk bonds here in the HYG, nor did you get any follow through out of the LQD, which is corporate grade. If we swap out the SPX just so you can actually visualize the divergence, do something that looks like this. Here are your higher highs. Here's clearly your lower lows. So a small red flag, probably not enough to justify a big short in the S&P, but something to call out. It's another one singular data point that might stack up with some of the other singulars that we've also talked about so far. If we jump into breadth more meaningfully responded after the breakdown on that Wednesday session / the Tuesday, if you will, as well, the failed gap up. So the fact that breadth is responding here does strike me as being bullish, and you could see it as well over on the RSP, right? Here's your big breakdown. We actually made a lower low underneath the previous low here relative to the balance, right? And this is the Tuesday break. Wednesday, of course, extends beyond it, but where did we close on Friday? Back inside the range. It's not sitting on a new higher high. We certainly want to call that out. It's not perfectly in confluence with the S&P weighted, but it's at least not offering such a bearish divergence where I would say, oh my God, the S&P weighted is toxic. Do not touch that on the long side. It's got to be a short. We're not really there. If this was trading here, that would be a far different story out of the RSP. You can see a rinse and repeat of the QQQE, which is the equal weight NASDAQ. Same thing. You break under the lows here and quickly recover into the end of the week. Yes, it's not a higher high, but it's also not a big enough red flag to go out and short the NASDAQ itself. Let's jump into our volatility prints. You can see VIX was lower here on the Friday session, as was, of course, the VVIX. Not a shocker over here, lower fading off the highs, no red flags in volatility. If we come into our vol futures, strong contangos across the board here. Look at the distance between some of these. That would just indicate that the very short and front end of the curve basically is not seeing any big inversion of volatility. The market's pricing in lower volatility now versus in the future. Same thing here in the 9 versus 30-day VIX, and the 1-day VIX is finally back in its comfort zone, even on the Wednesday breakdown. Notice that the upper wick was unsustained over 1275. So all up, what does volatility tell us? Market participants are fairly comfortable right now allocating capital towards the all-time highs, and nobody's really pricing in a black swan event, which you might argue is like, okay, that's usually the best time for a black swan event to hit the market. But if you look at skew, nobody's really going and buying really far out of the money puts in the S&P right now. So in terms of a hedge or insurance, so to speak, about a big breakdown in the market, nobody's really got that on right now. Let's go ahead and jump into our core list of companies, which you can see is like actively expanding down here. We've thrown Robinhood on the list as well. It's been a great trader recently. If you look at NVIDIA's daily chart, yeah, we got this sort of move higher. The gap up is holding. You're sort of in the sequence of just holding 2-day balance ranges. If we could stay, let's zoom back in on that. If we could stay in the 2-day balance range up top and then Brigade bolt into all-time highs, it looks fine for continuation. Nice lower wick on that Friday session. It was pretty tempting. There's a lot of great setups out there on Friday to set possible hourly higher lows. It's very difficult to want to swing trade anything in these current market environments with the drop of a tweet over the weekend or any big new opinion piece coming out destroying any chart. But nonetheless, I like the hourly higher low hold. You could clearly see if we start to do something that looks like this, it's probably a trade through thin structure up through Friday's highs and then blue skies beyond that. So that might be over 172.85, which is the overnight all-time high from the Tuesday gap up. Remember, this is the sympathy to TSM earnings there. This is, my apologies, that's on me. This is the H20 news. This is H20 Jensen being able to sell to China again. So if we can clear that overnight high, that's probably how we get to the Friday high. And then beyond that, it's blue skies, right? I really wouldn't be bearish NVIDIA at all. If we do come into this range here, maybe you develop a little bit of head and shoulders look. I would only be short for the attempt at a gap close under 169.20. Moving along to Microsoft. This is a name to, Kramer used to say, don't trade Apple, own Apple. Well, it's becoming that for Microsoft. Don't trade Microsoft, just own Microsoft, right? It's been horrible as an intraday trader. There was only one good breakout on the Thursday session there. Even that was fairly difficult to capture with way better opportunity, I thought, over in NVIDIA. So sure, you got this breakout here. If it can consolidate, build a higher low, great, looking for the uptrend to continue. Earnings aren't this week, but they'll be the following week, obviously. It's something to, again, really just monitor as a component of the broad market. It's not so much been a great trader recently. If it does set set up a higher low. 508 was the level, and it's sort of perfect into the close here on Friday. So if we could stay over 508, that's this previous high, great, looking for upside there. If you do want to trade at risk, reward along those lines, it's probably what you're looking for. I'd be a little less interested over 505.25. I'd be a little bit more neutral there, and then I just wouldn't touch it if it's inside of this chop there. That's where it really gets unattractive as a trader. Let's take a look at Apple, which is just, Apple is going to break, excuse me, really been battling this cough recently. Apple's going to break at some point, and it's going to release the beast. Whether it's up or down is TBD, but if there's any sort of catalyst that can get Apple out of this range, I mean, you're talking about a multi-month balance range here, gap to close overhead. It's the laggard of tech right now. I don't know what it's going to be, and it's very hard to say that Apple has done a good job with AI. This was a little bit of AI. Hey, we're going to outsource the model, right? So it's hard to say what the catalyst might be or if there's really anything bullish left for Apple. But if it can move out of the range, I would at least be thinking about the daily 200 test. A range double to the upside gets you a little bit beyond that. So even if you come up shy, test the daily 200, previous gap close over here. It looks good. You can even look at this on a weekly chart and just see how much range compression we've been going through here. Get a little bit of like bull flag look out of Apple there. So I like the higher lows it's been holding over 206.50. It's still it's worth a watch. You can see I obviously have the alert on it, but it's just got to be, it needs a catalyst. Need the catalyst, then maybe the gap close overhead. So that's Apple, still 213. The level is unchanged. The hourly is not even worth looking at. Amazon, a little bit slower here. Jeff Bezos has been selling way too many shares. Tell him to slow down for us, please. That way we can finally get a follow-through move. 224 continues to hold. Decent little look there on the Friday session. Shout out to anybody who caught it on the recovery back above. There's an intraday higher low. If you look at the 5-minute chart, this little thing right here, beautiful. Or you could just say like double bottom neckline. Shout out Shane if you're checking out the weekend videos. I know Shane caught that in the group. So 224, as long as we're above it, definitely still bullish here. The only trouble becomes these overhead resistance targets that we're going to start dealing with. I don't really want to trade directly long into them. I would prefer for some new structure to build out here, but the chart is meaningfully building consolidations in the upward direction, right? So if we could stay over 224, under 228.75, maybe the next break is 233.75 coming from this interaction back here. Amazon, definitely bullish, but probably looking for where's the hourly? We want to go to the hourly chart here. Probably looking for a cleaner hourly setup before we start getting involved. And anybody who's been trading the market, right, you know that you've had to sort of stick with the major themes of the market. AI, semiconductors, so let's just say AI/S for semiconductors, and then crypto/tokenization. If you're not in these two camps right now, you're sort of old guards of tech, Microsoft, Apple, Amazon, Google. Even Meta has been fairly rough recently. Tesla always has a mind of its own, so that goes in its own category. But those are really the names that you have to be in. AI, semiconductors, or crypto and tokens, right? So let's continue along here. Google, one of the old guards of tech that has not been moving great recently. Pretty sloppy action in here. It did get a breakout on Friday. It's holding above, but I've been saying this for a very long time. I'm not fond of actually trading Google's chart, and here it was a mess. You have this overhead resistance that's just above. It's got to it needs some big catalyst move to do something, whether it's up or down, doesn't matter, and then build out some new structure if it's going to become interesting to trade. If it's just grinding along in this uptrend, I sort of think that we have better opportunities. There's better volatility elsewhere. There's better structure in the market elsewhere. Meta gets kind of interesting because we have this 705.50 level that's back in play. Notice on the Friday session, there's this big failure from the sellers to move lower underneath the Thursday low, and we close near Thursday's highs on Friday. So if we can crack back up and over 705, I would think there's a thin structure retracement through the Wednesday breakdown into 714.50 as a trade idea, right? This starts to build out. A little bit of inverted head and shoulders, if you will, over the neckline. There's your trade, right? So risk and reward along those lines through the thin structure, 714.50. I wouldn't overstay my welcome there. You do have quite a bit of overhead supply from this previous area back here. But as a trade, absolutely interested in that early on in the week. If we're just consolidating down here, I'd let it be. I'd once again start focusing on semis, AI names, and crypto stuff. Let's take a look at Tesla. And over here on Tesla, a little bit of a break on that Friday session, up and over the moving average cluster, which is kind of meaningful, but I think the better break is actually going to come over 329.50. Yeah, you had a multi-day balance range in here, and you did get this acceleration, but if you can clear this, take a look at the hourly chart. Look at what we have off to the left, right? This sort of congestion, whatever, and here, and here, and here. If we can clear this 329.50s, I think this is the more lucrative trade, right? Risk and reward along these lines, 329.50 to 344. Origin of the breakdown from here, right? So I would love to see Tesla either build out a 2-day range over 323 and then do it. I'd love to see just momentum on Monday morning, something that looks like this. Really interested in that Tesla over 329.50 if it wants to play nice. If it falls under 323, I would not touch this with a 10-foot pole inside the moving average cluster. You could even come one step further and throw on the daily 20 SMA in there as well. That's the orange moving average now on the chart. It's also mixed in with the daily 200, the daily 50, this chop and slop. I don't want it. I'm not interested. Moving along to JP Morgan, really just as a check-in on financials. Big bank earnings went swell. You could look at Goldman, you could look at Morgan Stanley, you could look at Bank of America. All the big names came in fine, moving back higher, holding higher lows over the prior all-time high is just generally bullish for the S&P 500. It's always good to just have this on the list to understand if financials are helping the performance on the session. If we look at Netflix earnings, really unchanged, which is kind of bizarre for Netflix recently. I mean, obviously this one is kind of similar, but big gap up prior, big gaps over here, big gaps historically on Netflix earnings. Definitely lower after a monstrous run that it's been on the real high time frames. If you look at this, just a huge rally out of Netflix. So I'd be interested in seeing whether or not this can build a better base for another long opportunity. So come in here, build out a base that looks like this. Maybe this ends up being head and shoulders, TBD on that. But goes sideways, comes in, builds out a range like this. Maybe over time it starts to get interesting over that. I don't really see it as a short-term tradable name anymore. The spread on the options has been horrific. It's more of a swing trader's name these days. So Netflix, in terms of the Fangman names, remember we used to have Fang companies. Now and then it was the Mag 7, then it was like the Magnificent Four, the Fantastic Four, we should say. You're sort of like whittling down where the trade concentration is these days. Netflix really hasn't been good. Let's take a look at Palantir. This is absolutely something that has been good. Huge move in the upward direction here. Looks great. The candle structure is also really clean on the intraday. If you take a look, right, previous highs act as support here. Previous highs held as support on that Thursday session. It's really nice activity out of Palantir. Clearly, if this holds up, this is your next steps for upside. 150.50 holds. Brigade bolts over 155 for blue sky territories. If you break down underneath 150.50, I wouldn't shy away from this head and shoulders. I would more so be interested in this as a possible reversal back higher. This is a much more meaningful daily pullback here, 145.50. So Palantir higher low longs are the name of the game. If you want to try a short from A to B, I'm not going to say it's wrong if the head and shoulders is there, but it is definitely fighting the trend. It is through some choppier structure. I would try to align with the higher time frame trend, which is absolutely in the upward direction. If you look at Broadcom, another semiconductor name that's been great. Opportunity on Friday, as we were saying. Swing trades look pretty good there. Possibility for a higher low. I didn't do anything about it, but if the higher low can hold, maybe possible breaks here on Monday morning to get back up to the all-time high. Obviously, Brigade bolts through that, get interesting over 287.85, my apologies. Below this, I would still, just like Palantir, sure, call it a head and shoulders, fine, whatever. Doesn't matter. At 277.50, I would still be thinking about the opportunity from the daily perspective to possibly act as support, right? You get a daily breakout, daily Brigade bolt here, higher low, looking for higher. I mean, Broadcom has been on a tear here, and earnings are a non-issue on this one for quite some time. Let's take a look at AMD, another semiconductor name that's been acting well. If we take a look at the structure here, I like the possibility of the hold into the end of the day on Friday with the hammer candle off of 156.75 over this level, and I think we fly. Why would I say that? Fly. I maybe shouldn't attach such an emotional word here, but notice on Thursday all the equal lows. And we were watching this closely intraday on Friday with the group, but when you drop that, you're really looking for the repair of the level and then the trend to resume. So if buyers can pick it back up over 158.85, that starts to look like a very short-term double bottom. Brigade bolt over the level is the recapture of the breakdown point. I would firstly look at possibly Thursday's high or opening print as a key level, 161.85, give or take. And then beyond that, there's really some more room to run. Right? You're talking about 166.65. So AMD has been a top trader recently, and it's a great name to continue to keep on watch here. These are the sort of ideas I would look for in the upward direction. If it's just a straight shot like this, that also plays. If we come in here, I wouldn't touch it. Maybe something that looks like this starts to get interesting after we partially close the gap. 150 is a key level. Higher low back over 153.25 is a long, right? Full gap fill reversal off of 147.25 is a long down here. Let's put a circle on that one. AMD is a top focus. Another top focus, which is why it's been added to the core list of companies. Probably, it's might seem like it's time to replace Netflix, time to replace Apple these days, Microsoft. But let's just take a look at Robinhood. Very, very clean and awesome momentum moves on this name with the whole legislation, Genius Act, passing things through the House, tokenization efforts, the whole 9 yards. It's definitely a thematic name that's been trading well. If you take a look at where we've broken out of, I would love to see this. On the daily timescale, 101.15 high or low, you can see a little bit of an inverted hammer / doji-esque bar on that Friday session. If we pull back under Friday's lows, I would be expecting that. If you stay in Friday's range, take a look at this. Partial gap fill reversal. If you're over this 111, I would target Friday's high and then blue sky territories beyond that. We could throw the level on here if we'd like, around roughly 113.50. 113.50 all-time high would be the target first, so plenty of range to trade for, right? That's obviously a 2.5 point move on Robinhood. You're talking about a stock that's still very close to about $100. That's really, really solid on options, right? So something here is a trade idea, or if it pulls back all the way, let it do its thing. I would love to get this long off of 101.15 as well. Blue sky territories, of course, it will play, but a little bit harder to manage risk up here towards those all-time highs. I've got 4 additional ideas. So speaking of the tokenization efforts, let's start with MSTR. MicroStrategy, that's not a tokenization name, that's a crypto play. You're absolutely right. It does have to do with Bitcoin. Bitcoin's chart looks fine on the pullback. I would love to see if MicroStrategy could hold this. If MicroStrategy could hold 422.25, big break here, you have nothing but thin structure to retrace back to the upside. Maybe this plays out as a Stevie Wonder trade early on Monday morning over 428.75. Let me get my numbers straight before I open my mouth there. Consolidation, Stevie Wonder above. So what you want to do is you just want to manage your risk based on total dollars in the trade. Go out and buy an option. If you want to risk $500, buy an option that's worth $500. Buy one of them. If you want to risk $1,000, find an option worth $500. Buy 2 of them, or find an option that's worth $1,000. Right? You get the idea. Stevie Wonder is literally we go in blind off the open. Don't worry, we talk to his lawyers. We can say it. We've got the rights. If we take the Stevie Wonder trade, you open in here. As soon as you break your long, managing risk based on size, looking for this target, right? It's such thin structure retracement, it may happen so fast, you can't actually find a reasonable and executable candle structure on the intraday, right? The other thing that could happen is that you open on a move over 428.75. Ideally, you would pull back, hold it, and then go. But again, to sort of compensate for not knowing whether or not this is going to happen, if you're just going to squeeze shorts out of this, then you might just want to go in off of the open with, again, size managed based on total dollars in the trade. If this opens on a gap down underneath Friday's lows, it's just not in play. Not in play. You're underneath the key daily level, right? So that's MicroStrategy. Let's take a look at, we could go to Coinbase. This was not one of the original 4 ideas, but let's just look at it because it is thematically correct right now. You have 430 previous all-time high, which clearly rejected on Friday. I think this aligns more so with Robinhood possibly pulling back into 380. Right? If you could get the daily higher low here after testing a brand new high, I think that's a meaningful place for an attempt at a possible higher low. If you look at the hourly chart, pretty sharp rejection of that. This area in here is a little bit choppy, a little ugly through this sort of segment, so I would really prefer to just wait patiently for about 380. Maybe the daily 20 SMA meets us there as well. 380 Coinbase, all right? That's the pullback there. Let's move back to the original ideas. Let's go Oracle. More along the lines of AI as a theme. You can start to see a little bit of an inside bar on the Friday session that continues this little hourly downtrend here. So what I'm really keying into is the hourly downtrend, and if that's going to persist, I would love to try a long here off of 237.75 for risk reward back up towards the highs. Clearly a top end of the prior range here. If the market pulls back, it's an awesome spot for a daily higher low there on Oracle, 237.75. There it is. That is ORCL. Next up, let's go with Uber. Another name that's been thematically in play, so to speak. Not so much in terms of crypto or AI, but robo-taxi perhaps, some of the stuff with autonomous driving. Uber, we know that Ackman took that big stake in it. What I like about Uber is the fact that you had 2 equal lows here. Friday sweeps that low, supports the daily 50 SMA, and then closes over 89.90, which was a previous level over here. Intraday, in some of these trades back here, that was such a key and important hold. I think it's going to be critical again. If you're over 89.90, I would love to see a break of the 2-day highs to get back up towards here, 93.40s. So if we take a look on the hourly chart, you can see this now. Maybe the argument becomes this turns into inverted head and shoulders over the neckline at 91.20, targets 93.40. So really interested in Uber there over 91.20. That is the 2-day high that I would be tracking. Something that looks like this. Intraday, you want risk and reward, something along those lines. That's Uber. Let's move along into Boeing, which is the final of the 4 original trade ideas. Coinbase was sort of an extra. The reason that this hit the scanner just as a watch is they do have, is that this week? No, this is next week. So we're clear on earnings for weekly options, which is fine. Not that they trade fantastic volume on Boeing, but really, really tight balance range. I mean, this is a 5-day balance range all week, just not really doing anything. So if you break down, I think the opportunity is trying to get it for a higher low long here over 218.60. Or if you break and Brigade Bolt intraday on the hourly chart over 232.60, you're probably looking at your next target above. I don't think we have one mapped. We'll find one together in just a second. But here's the hourly chart so you can see it, right? If we support the bottom end of the range, do something that looks like this, you're sort of breaking out of a pretty key looking daily bull flag. Here it is. There's your daily flag as well. Let's look for a target together off to our left. Let's just make sure we can throw on a number of years worth of price data. What do we have? Oh, yeah. Oh, yeah. This is just the icing on the cake. This is just the icing on the cake. You've got a gap to close overhead up to 245. Up to 245. And let's just throw this on. If that aligns with the top of the flag, which I think it's pretty darn close. I believe it's pretty darn close. My short-term memory is not serving me well. I don't remember if 234 was close to the number or not. But let's go back. Yeah, look at that. So massive gap to close overhead. I think that this gets very compelling for a possible long there. Even if it's a small swing trade, you could use shares if you don't want to battle theta. I would love to see something out of Boeing for that possible gap close overhead. So pretty interested. Pretty interesting stuff. Not really in the themes of like crypto and AI, but the chart setup very, very clean with 5 days of sideways consolidation. That's all I've got for you in today's episode of the Weekly Watch List. If you enjoyed the video or learned anything new, maybe those yearly trend lines, let me know down below in the comment section or by giving the video a very simple thumbs up. Remember, we are live every morning here on the channel at 8 o'clock Eastern Time, 8 a.m. 8 a.m. Let's put an M there, and then EST for Eastern Time. We go through the pre-market prep and we build a game plan for the day ahead. If you're not joining us for the morning sessions, you're kind of missing out on what I would argue is the most actionable analysis day by day. If you use these for higher time frame portfolio management, all good. Appreciate you coming out to the weekend and midweek shows anyhow. If you want to trade live with myself or just hear my intraday thoughts, you can check out the first link listed down below in the description. That is the live squawk. Having a good time in there trading with the group, giving my thoughts in real time. And it's been really a successful first 2 months. Happy to sort of maybe release a little report on how we've been doing there at the end of July. So with that said, I appreciate you coming out to the show. Have yourself a green trading week. And as always, I will see you in the next one.